And taking a look at global and Indian markets, well, Asian shares and most currencies, they held tight ranges today morning as investors awaited developments on US fiscal stimulus and coronavirus vaccines amid a resurgence of infections in Europe. MSCI's broadest index of Asia-Pacific shares outside Japan was 0.1% weaker. Australia's benchmark index slipped 0.5%, while New Zealand's NZI Z250 stumbled 0.6% as well. Chinese shares opened in red, with blue chip index CSI 300 down 0.3%. Meanwhile, HSBC and Standard Chartered's Hong Kong shares fell today after media reports said that these banks moved large sums of allegedly illicit funds over nearly 2 decades, despite red flags about origins of the money. The signal from futures was not very optimistic as well, with S&P 500 E-minis falling 0.1% and pointing to a weak start for Wall Street today. Japanese markets were closed for public holiday today. Coronavirus cases have now surpassed 30 million, casting a gloomy spillover prospects of a V-shaped economic recovery. The biggest threat to global growth is a resurgent pandemic, with analysts fearing growth and inflation could surprise on downside in the coming year. A lack of material development on US stimulus package is also an overhang, adding to worries. European countries from Denmark to Greece, they have announced new restrictions on Friday to curb surging COVID-19 infections in some of their largest cities, while Britain was reported to be considering a new nationwide lockdown. The dollar slipped in currencies 0.1% against a basket of major currencies to 92.85. Euro was up 0.25% at 1,000.294. While the risk-sensitive Australian dollar was also slightly higher at 50.73. British pound was up 0.25% at $1.2947. In commodities, US crude slipped 2 cents to $43.13 a barrel. Brent crude fell 1 cent to $41.1. Gold was slightly lower, with spot prices at $1,951 an ounce.